morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with your European session morning outlook. We'll start with the North American markets. We had the retail sales month on month, 0.5% better than expected at 0.6%. Retail sales ex autos month on month, 0.3% better than expected at 0.7%. Retail control, 0.2% better than expected at 0.5%. CPI core SA, 0.43 higher than previous at 247.50. CPI NSA month on month 0.068 worse than expected at 241.040, and CPI month on month 0.1% worse than expected at 0.2%. CPI year on year 0.1% worse than expected at 1%. CPI X food and energy month on month and year on year was as expected at 0.2% and as expected at 2.3%. And the last news, capacity utilization 0.5% higher than previous at 75.4%. The dollar was on track Friday to book its largest weekly gain against the yen since February 1999 as a string of strong U.S. economic data and expectations of powerful monetary and fiscal stimulus out of Japan helped boost the greenback. As this week's data isn't very strong, besides Friday's CPI, which we are expecting, if we are to see the dollar move, we are going to have to find it through the indirect response to its major counterparts. The Dixie is up to 96.53 from 96.08. The USD Canadian dollar is 56 pips up on Friday. Today's event is it's tier 2 event, and it's the NAHB Housing Market Index. Alright, on to the European markets. On Friday, the trade balance came out with mixed results, basically. The CPI month on month and year on year was as expected at 0.2% and 0.1%. The CPI core month on month and year on year was 0.2% less than previous at 0% and as expected at 0.9%. The ECB is scheduled to deliberate policy on Thursday. There will be a deposit rate decision, interest rate decision, and monetary policy statement and press conference. Surrounding by a range of important economic data, consumer and investor sentiment surveys, PMIs acting as GDP proxies, the group will have determined the state of their economic trajectory, the financial instability stoked by Brexit and Italy's banking troubles, and the very real lack of impact that previous efforts have shown in December and March. We can expect to see some volatility on the euro because of all of this week. Alright, the UK markets. UK stocks ended a volatile trading session slightly higher Friday, but with travel shares under pressure in the wake of a deadly terrorist attack in France. The UK's FTSE 100 index rose 0.2% to close at 6,669, ending a 3-day losing run. For the week, the UK benchmark ended 1.2% higher. The British pound strengthened for only the second week of the past 7, as a key surprise out of the Bank of England and positive political developments eased financial market tensions. Yet British pound volatility remains likely as many questions remain on the post-Brexit future for the UK. A busy UK economic calendar in the week ahead could spark some short-term currency moves, but the bigger volatility could come on the far less predictable political headlines out of Britain. Okay, Asian and Pacific markets. Already, markets are beginning to circle the date of the next Bank of Japan meeting on July 28th and 29th for a potential announcement of additional stimulus. And after Shinzo Abe and Haruhiko Kuroda met with Ben Bernanke earlier this week, the rumor that Japan may be nearing the deployment of helicopter money began to gain traction, furthering trends of yen weakness and Nikkei strength. China's yuan fell to the weakest level since 2010, pulled down by cooling property prices, a dollar rebounding on haven demand, and a weaker central bank fixing. The GBP JPY was the biggest mover. It ended 220 pips down with a huge 545 pip range on Friday. This Thursday, we'll have Japanese all-industry activity, and Friday, Japanese foreign bond investment and foreign investment in Japan stocks. And we'll also have more all-industry activity index month on month. All right, commodities. Baker Hughes oil rig count, it increased by 6 last week to 357. This is the third straight weekly gain and the sixth increase in 7 weeks. Gold prices declined on Friday after a number of the U.S. economic reports suggested that economic growth regained speed in the second quarter. The oil futures ended Friday's session higher as better than expected economic data from the US and China bolstered the outlook for future energy demand. Crude prices gained in Asia on Monday, reversing earlier narrow declines in the wake of a failed military takeover attempt in Turkey. At the weekend, that raised regional stability concerns along a key transit route for supplies, with investors still working through regional political stability implications as well. The S&P 500 index had a range of 20 points at 2,158 now. Gold had a range of $16 at it's down to $13.29. Silver had a range of 34 cents at $19.99 now, basically $20. WTI, the crude oil, had $1.30 range at $45.94 now. And natural gas is trading at $2.76 at the moment, with a range of 10 cents on Friday. That was all for today's outlook. Thank you for your attention, and I will see you next time. Goodbye.